Hi there, Tony Sycamore here, Senior Market Analyst at IG in Australia. On Friday, the Nasdaq, driven by the ongoing tech frenzy, marked its fifth consecutive session of record closing highs last week. In contrast, the S&P and the Dow Jones closed marginally lower, reacting to a soft consumer sentiment reading. Specifically, the University of Michigan's Consumer Sentiment Index fell for a third straight month to 65.6, the lowest since November last year. Falling consumer confidence suggests that the resilience of the American consumer is being tested as households run down their savings to combat higher interest rates and also cost of living pressures. As a reminder, consumption spending accounts for about 2/3 of US GDP. Hence the saying, as the US consumer goes, so goes the US economy. Aside from a busy lineup of Fed speakers this week, we have retail sales data to come on Tuesday night and the S&P Global Flash PMIs on Friday night. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as we start this new week. Okay, so we have this price action where the S&P 500 closed seventh week in 8 weeks. And of course, it pushed up towards this 54.50 level. Now, in terms of where it goes from here, well, you can see we're in a pretty solid uptrend from the October lows. And where I think we can probably push up to is towards this 5,500 area, which is a bit of a psychologically important number because it is a round number. If it was to break above 5,500, then I would expect to see it continue up towards the top of this trend line resistance, coming in around 56.60 to 56.70. That's about 4.5% above the current price, which would suggest we'd probably need to see some sort of blow-off move occurring. Certainly at this point of time, it does look like that is exactly what we are seeing. On the downside, we have support coming in from this 53.41 high from May, and of course, the 52.60 area from the highs of March. Now, where I think you would need to see the S&P break below to confirm that we have seen the uptrend run its course and that a deeper decline is underway, well, initially it would have to break below this trendline resistance coming from the October lows. That's at around 52.25 to 52.30-ish, currently obviously rising. And this May low, which was at 51.91, if we were to see a sustained break below both of these levels, then I think you're probably looking for a deeper decline, initially back towards this 49.53 low, but the next level below that would be this 48.30 area coming from the 200-day moving average. Looking at the Nasdaq, well, the Nasdaq has absolutely rocketed since this sell-off into the end of May, which we thought was rebalancing flows. Where it goes from here, well, I think probably you can see that it is overbought and it is due a pullback. But before that pullback occurs, then I wouldn't be surprised if it did see some sort of blow-off high up towards this 20,000 area before a pullback were to occur. On the downside, you have support coming from this May high at 18,907, and then a band of support coming in around 18,500 to 18,400. If we were to see the Nasdaq break below this uptrend support coming in around 18,000-ish, which is being reinforced by this May low coming in around 18,189, I think that probably confirms that the uptrend has run its course, and you'd be looking for a pullback towards this low here from April, 16,973, which is reinforced by the 200-day moving average coming in around 16,853. Thank you for listening and have a good week ahead.